Hello, everybody. Welcome to Wednesday. The S&P 500 was down almost 0.2% today. Wasn't a terrible day altogether, actually. We held up on the trend line that we've been kind of guiding along on since the bottom that we hit in the middle of October. So that wasn't bad. We are seeing kind of a shift in the market right now, in my opinion, away from really the concern with the inflation as we're starting to see the inflation numbers get better as the reports come out, and more towards the possibility of recession. Lots of indicators are showing that recession is possible next year. And so the focus is going to be on, how does that recession play out? How does it impact earnings of companies? And that's going to be the key issue, I think, going forward here. Recession can help inflationary pressures also, which could be a good thing. I mean, for example, today we saw oil come down quite a bit, and we've seen it come down tremendously from its highs. And part of that is because there's some expectation for global slowing. And then, oil and energy go into almost every product and service we get. So that could help inflation if it's lower, for example. So, we'll see how that plays out. But I think the key thing here is we're seeing the bond market, like the 2-year Treasury yield came down again today, signaling that there's an expectation that the Federal Reserve will be lowering rates at some point in the future, or at least maybe not raising them as much as everybody seems to think in order to get inflation down. And now we're shifting this focus into, what type of recession are we going to have? And I think it's very fascinating that there are a bunch of components that go into the economy that are doing quite well. The job market is very healthy. The consumer seems to be spending quite nicely. Productivity is starting to grow again at companies, which could really help with earnings. And so one of the things we have to be careful of here is just, the S&P 500 companies, for example, are on the S&P 500 because they're really good at managing earnings. So even if this environment becomes softer, a lot of these companies could still do quite well by, tightening up their expenses and really increasing their productivity and those types of things, and still maybe be able to deliver some pretty decent earnings that might surprise people as far as that goes. So this is going to be very fascinating to see how this plays out. How does the consumer stay intact? I talked yesterday about this pent up demand and people spending money on services that they weren't able to do for quite a while because of the pandemic. Don't see that going away anytime soon as far as that goes. So that might be what helps kind of soften the blow as the economy kind of slows down. And if it slows down a little bit, maybe that helps inflation at the same time. So lots of recessionary environments where the stock market has done quite well. But it really has to do with earnings and how those are impacted. So that's what we're going to be watching for and listening for going forward here. So look forward to being able to talk to you tomorrow. Thank you very much.